Okay, so I'd like to take this opportunity to welcome you to the transport insurance model of the FIATA Diploma in Freight Forwarding program. In this model, we try to expose you as a freight forwarder to, the wide knowledge base as far as insurance is concerned. At certain point of your time as a freight forwarder, you'll be acting not just only as a custom broker or a customs house agent, but when you act as a multimodal transport operator, an MTO, it will mean that it is required for you to arrange cargo insurance for your client. So the goods being shipped or the goods being imported or being exported by your client, have some risk alongside risk of theft, risk of damage, poor handling, or whatever. So you should be able to actually have knowledge in transport insurance, and this will help you to satisfy your customers whenever you are acting as a multimodal transport operator. So the key objective for this model is that the trainee should be able to give information on different possibilities of insurance coverage and be able to cite their characteristics. You should also be in the position to state briefly the liability of carriers, the contract of carriage, and your knowledge should enable, this knowledge that you are going to acquire should enable you deal with any simple insurance issue in your journey as a freight forwarder. So the course will be divided into two. We deal with liability insurance, where we talk about the liability insurance policies and the liability of the different parties of international trade. When we talk about international trade or different parties of in the contract of carriage, we're talking about you, the freight forwarder, the carrier. We are talking about the owner of the ship, which can either be the consignor or the consignee and all that. But when you come to the insurance market itself, the general insurance market, we have the insurer as a party to the transport insurance. We have the insured, okay, the person who is actually has obtained the insurance. And then we have the broker or the agent. And we have surveyors who are sometimes brought in to assess the risk involved and the claim issues and all that. And even the insurer himself sometimes would have to also cushion themselves by procuring other insurance to cover, the liabilities that they have taken from their client. So we have the reinsurers. So basically, these form the general parties of the general insurance market. And we shall look into all those things. When it comes to transport insurance itself, we shall be looking at the cargo insurance policies and the type of coverage. And then we look at issues of partial average. We call it weight particular average. And then we have general average issues. Then we deal with the duties of the freight forwarder in case of damage. So as a freight forwarder, as a customs house agent, when there is a damage, how do you solve it? These are very, very crucial to you. So first of all, let's deal with some key terminologies in transport insurance. And then the key among these is the definition of insurance. When we talk about insurance, particularly in the marine case, we describe insurance generally as a cooperative device that allows the spread of loss caused by a particular risk under a number of persons who are exposed to it and who agree to insure themselves against that particular risk, which means that insurance provides a pool to which many contribute certain sums of money we term as premium. And out of this premium, a few who suffer the losses are compensated by the insurer. So if you look at a picture that you are looking at, the insurance is there for any persons to actually contribute small token. It can be a monthly contribution, it can be yearly, annually, or whatever. And we call it the premium. And those premium are accumulated into a pool so that when any of these contributors, okay, suffer a certain loss that they have actually insured against, then the insurer will actually go into that pool of money to indemnify those losses to the insured person. Another risk, another terminology is I've used this word insured and the insurer. By insurance, the risk is transferred from an individual to the insurer, who takes into account the total likely loss in a certain period and then fixes a premium to be charged from each person's insured. So a number of persons who have actually insured against that risk or are doing business with that insurance company. So the insurance company is the one we are terming as the what? The insurer here. So it can be seen that insurance is a device by which an insured person, okay, the person who has gone to or approached a company to actually insure their belongings, they receive some protection from the losses that they are likely to suffer in the event of what? Eventuality. And in exchange for paying a comparatively smaller amount that they contributed over the years. So when you procure an insurance for maybe 5 years and the insurance is able to mature in let's say 6 months, even though you have not contributed that much, after 6 months, if the incident actually happens, regardless of the small amount that you have contributed, you are going to be indemnified with something, the heavy loss, to actually compensate for the loss that you have actually suffered. It can be noted that insurance cannot prevent loss. This is something that is a funny thing. You see the picture that I've put there. The young lady is saying that he's sorry. But you must be mistaken. You see, I have life insurance. Insurance do not protect you from the property being under peril from destruction or whatever. Okay, insurance itself cannot prevent the loss of the property or the goods by any peril. What it does is to provide a financial compensation for those effects of this misfortune. So it must therefore be noted that insurance does not protect the material property, which is the subject matter of the insurance, but the pecuniary interest of the insured is what insurance actually catered for. We talk about contract of insurance. A contract of insurance is a contract in which one person undertakes in return of consideration called a premium. So another meaning for premium is a consideration. You provide certain consideration over some period of time to pay. You say that they should consider this amount, and you pay to the other party, okay, a certain sum of money on the happening of an event of death or whatever, or to indemnify the other party against a loss arising from the risk be insured in case of a property. The party which promises to pay a certain amount of money to or to indemnify the other party is what we call the insurer. And sometimes in other jurisdictions, they are also known as the assurer, especially when you go to life insurance. They can also be termed as the underwriter in case of marine insurance. And the party to whom this protection is given in exchange of the premium is called the insured or the assured. So every insurance contract has a document, okay? It has a document that spells the terms and conditions of the contract. And then it is called a policy. That document is called a policy document. And the consideration which the insured has to pay, okay, I've already mentioned it, the consideration which the insured had to pay to the insurer for protection is called a premium. And the amount which a policy is issued is also known as the what? Insured amount or the policy amount. The thing or the property insured, what has been insured, is called the subject matter of insurance. And the interest of the insured in the subject matter is called the insurable interest. So as you are learning, you get to know that when there is no insurable interest, there is no point in engaging in insurance policy.